Nikita, Aparjita ji will join later or
I have joined, sir. Sir, good morning, sir. Yes,
good
I have
morning,
joined.
good morning. Yeah, welcome, welcome. Huh?
Yeah, thank you, thank you.
Yeah.
Ignish ji, we
Haji.
are going live now.
Okay.
Yes.
So can I start? By? Hello and welcome everyone on this International Friendship Day. On behalf of ASB of ICAI, I take pleasure to welcome all the viewers, esteemed speakers, and all participants in this virtual outreach on recent amendment in Indies. The objective of this outreach is to apprise you all. आप सबको अवगत कराना है क्या changes हुए हैं Indies 1, Indies 8, Indies 103, Indies 107, Indies 109, and Indies 116. Dosto, these changes have been made by the MCA, notified by the MCA on 24th July 2020. This is in pursuant to the changes made by the International Accounting Standard Board. हमारे Accounting Standard Board इतने proactive है कि चंद दिनों में ही, in few days only, they come out with the changes which have been carried out at the international level, and thereby keeping us, keeping you, keeping ICI at par with the international arena. So we are not lagging behind. हम पीछे रहने वाले नहीं हैं. हमारे अकाउंटिंग स्टैंडर्ड बोर्ड के चेयरमैन एंड हमारे अकाउंटिंग स्टैंडर्ड बोर्ड के वाइस चेयरमैन भी इतने कार्यरत है कि दे विदाउट लूजिंग टाइम दे कम आउट विद द लेटेस्ट अमेंडमेंट आपको अवगत कराना है सर. दोस्तों, समय के साथ कदम मिलाना बहुत जरूरी है, बहुत अहम है, एंड इट्स वेरी इंपॉर्टेंट टू बी रेलेवेंट, more so when it comes to the lagging behind like accounting standards. And keeping that spirit in mind, today we are going to discuss, you'll hear from the horse's mouth कि what are the changes, क्या changes आए हैं and जो आपके लिए जानना बेहद जरूरी है. Everyone knows, friends, that Indies is an evolving standards. They are the evolving standards. They keep on changing at regular interval. And अगर इसके साथ हम कदम नहीं मिलाए, अगर आप कदम नहीं मिलाए, तो फिर हम पीछे रह जाएंगे. But ऐसा नहीं हुआ है. Institute of ICA, Institute of CA is doing all its best to keep you updated, keep you relevant. दोस्तों, एक बात वाइस चेयरमैन जी एंड विद्याधर जी, मैं आपसे एक इजाजत चाहूंगा मेरी मन की बात कहने की, केवल 2 मिनट में. कैन आई हैव योर परमिशन सर?
प्लीज सर, प्लीज.
ओके,
यू आर द होस्ट.
थैंक यू सर. मित्रों, मैं एक सीए भी हूं और एक सीपीए भी हूं, अमेरिकन इंस्टीट्यूट ऑफ सीपीए. बट बतौर सीए, Indian CA, I am getting volcano of knowledge free of charge. ये अकाउंटिंग हमारी सी इंस्टीट्यूट नॉलेज डिस्ट्रीब्यूशन में केवल अकाउंटिंग स्टैंडर्ड्स और ऑडिटिंग स्टैंडर्ड तक सीमित नहीं रखती है सर. They are giving you all the informations, educational material, guidance notes, चाहे वो इनकम टैक्स हो, चाहे वो जीएसटी हो, चाहे वो कंपनीज एक्ट हो, चाहे वो इंटरनल कंट्रोल हो, चाहे वो स्टैंडर्ड्स ऑन इंटरनल ऑडिट, हर क्षेत्र में they covering the whole gamut of the CA profession, and everything is coming almost free of cost to you. And शायद इसीलिए हम इसकी इतनी कदर नहीं करते. तो मैं जरूर समझता हूं कि let's evaluate the ICA's efforts. क्योंकि AICP में अगर मुझे एक भी स्टैंडर्ड्स की कॉपी चाहिए दोस्तों, मैं मजाक नहीं कर रहा हूँ, सच कह रहा हूँ, I have to shell out few dollars. जी हाँ, besides paying my huge annual membership fees of 1,500 USD, इसकी तुलना में जो हमें नॉलेज मिल रहा है, the dissemination of knowledge done by ICI is commendable. So we must salute the head honchos and the torchbearers of ICI. तो ज्यादा वक्त नहीं लेता हूं दोस्तों, तो आपको ये चेंजेस से अवगत कराएंगे हमारे पहले तो है वाइस चेयरमैन ऑफ अकाउंटिंग स्टैंडर्ड बोर्ड डॉक्टर सी संजीव सिंगल जी. उसके बाद है सी विद्याधर कुलकर्णी जी, ही इज हेड एंड टेक्निकल डायरेक्टोरेट. देन है डेप्यूटी सेक्रेटरी सी ए परमिंदर कौर जी, and then the special invitee CA Aprijita Sarkar. So they are going to update you and upgrade you with the nitty gritties of 6 standards which have been changed. And ye standards hai Ind AS 1, Ind AS 8, Ind AS 103, Ind AS 107, Ind AS 109 and Ind AS 116. तो चलिए उनकी जुबान सुनते हैं. Let's hear from the horse's mouth about all the changes. So I invite Vice Chairman Dr. Sanjeev Singhal Dr. C.A. Sanjeev Singhal to please come and share your views on these changes. Welcome, Dr. Saab.
Thank you so much, Yagnesh Bhai. It's always so pleasing, so soothing to listen to your voice, and it reminds us of Amin Sayani of good old days. Thank you so much. As vibrant always. I have seen that at least from last 12 years. I know you. You're the same. Very good. Keep it up.
Thank you.
We're really proud of you. And let me tell you that Yagnesh Bhai is also a special invitee with the Accounting Standard Board of ICAI. He's been a special invitee with the Ind AS Implementation Committee, and he's one of the star faculty for the Ind AS certificate course, which we have. So this is, as Yagnesh has said, this is one more initiative of the Accounting Standard Board to keep the members informed about the latest amendments in Ind AS. Since these amendments are immediately applicable, we should immediately convene a program. Only 2 days ago, we have done a masterclass on the impairment of financial assets and the expected credit losses. We have also brought out many publications on AS and Ind AS, whether it's a video book or an audio book or a checklist, disclosure checklist. So please make the best use of it. And with this kind of a program, we are, taking another giant step. Today, out of the 4 speakers, 2 speakers are from the ICAI staff, Vidyadhar Kulkarni and Parminder Kaur. So it will be our endeavor under the leadership of MP Vijay Kumar, who is the chairman of Accounting Standard Board. So both of us want to develop the staff as well. And this is a testimony that 50% of the faculty in this technical session is from ICAI staff, and I'm thankful to Aparajita also for giving her time. Now I'll take you through the changes which are there in Ind AS 116 leases. There was a huge demand for changes in this standard because with the COVID-19 global pandemic, we have seen that in many cases, rental renegotiations have happened. And if these were to be treated as a lease modification, this would have put the lessees into a great amount of trouble. So the International Accounting Standard Board also agreed to extend these concessions. The same were discussed at the Accounting Standard Board, and the Accounting Standard Board also felt that we should give the necessary relief. This was approved by the Council of ICAI as well, and then by NFRA, and then MCA was kind enough to do a prompt notification of these standards. And this there are already 650 people attending this webinar, which shows the interest in these amendments. So now I'll just briefly share you a PowerPoint presentation which contains the key changes on Ind AS 116. So these are the concessions, but largely on account of the COVID. July. So basically in May 2020, ISB has issued these final amendments, and in July 2020, the Accounting Standard Board has also come out with the amendments to Ind AS 116, and we have followed the due standard setting process for the same in just 2 months of time. So if you look at Ind AS 116, there are changes in the lease payments. Then there are 2 models. One is the modification in the lease, that it can be considered as a modification in the lease, and modification could be treated as a separate lease or may not be a separate lease depending upon the fact and circumstances of the cases. Alternatively, it could also fall into a variable lease payment. A variable lease payment happens when it's an index or a rate-based change, or if it is a sales base, for example, a 2% of sales or 1% or 3% of the sale. then it could be considered as a variable lease payments. When there is a lease modification, it is to be accounted as a separate lease if it increases the scope of the lease by adding the right to use one or more underlying assets. So, and the consideration for the lease increases by an amount which is commensurate with the standalone price for the increase in the scope. In other words, if there is a modification, it will be accounted for as a separate lease only and only if two conditions are satisfied. One is the scope of the lease has been increased, so some right to use have been added for one or more underlying assets, and the consideration for the same is also increasing by an amount which is commensurate with the standalone price for the increase. That is, if the increase was itself a separate lease, whether it compensates it for the same or not. Otherwise, it will not be treated as a separate lease. So if it is considered as a separate lease, then this will be accounted for as a new lease like any other lease. But if it is not considered as a separate lease, then the lessee shall be required to allocate the consideration between lease and non-lease component, determine the lease term, and importantly, remeasure the lease liability by discounting the revised lease payments using a revised discount rate. Since I talk about an increase, it shouldn't give an impression that it applies only to an increase. It applies to a decrease in the scope of the lease as well. So if there's a decrease, then we have to decrease the carrying amount of right of use assets to reflect a partial or full termination, and any gains and losses which may arise in this process will be recognized in profit and loss. And if there are any other modifications, say the lease rental changes, then one has to make a corresponding adjustment to carrying amount of right of use asset and adjust the lease liability to reflect the remeasurement as per para 46 of the standard. Now, when this COVID-19 has happened, number of representations have been made to the International Accounting Standard Board. Lessors around the world have provided the rent concessions to the lessee. For example, a movie theater or maybe some of the premises which are rented out for entertainment business. These were completely there was no business. So the lessors have also understood the problem, and in many cases they have provided either a deferment or a partial waiver or a full waiver during the lockdown period. Now, IFRS 16 contains the requirements where a lessee can assess whether it's a modification or it is not a modification. But in these challenging times, when everybody is working from home, it was felt that the lessees may have identified potential difficulties in assessing whether COVID-19 related rent concessions are lease modifications or not. To address all these concerns, ISB agreed to make certain amendments to IFRS 16. And an ISB view was that COVID-19 related rent concessions will not meet the criteria of a separate lease. So they were anyway of the view that this is not a separate lease. However, for the purpose of clarification, they decided to come out with an amendment. Recently, during a SAFA conference for the South Asian countries, in which the vice chairperson of the ISB, Sue Lloyd, was also present, she said that even if we would not have made the amendment, it would have meant the same. However, for the purpose of clarifying to the world, they decided to carry out an amendment. So in this slide, this has been done. This amendment has been done. And of course, the relief has been given only to the lessee, but not to the lessors. So many people have asked that why no relief has been given to the lessors. The IASB point of view is that when they have migrated from IAS 17 to IFRS 16, primarily the changes were from the lessee's point of view and not from the lessor's point of view. Hence, they have not thought of giving a practical expedient to the lessors in this regard, though I believe that it could also have been done for the lessors as well. So that's primarily the reason that's been mainly extended to the lessees. On a similar line, So basically, para 46A has been inserted for the lessees, which provides an option for the lessees as a practical expedient not to assess whether a particular rent concessions or lease modification. यानी कि आपको ये assess करने की जरूरत ही नहीं है कि lease modification है या नहीं. And this is a practical expedient. Means if you want to assess, you can assess. But if you don't want to assess, don't assess. And they can account for these rent concessions as if these are not the lease modification, and rather these will be treated as a variable lease payment. We'll also explain you with the help of journal entries that what it would mean as far as accounting and financial reporting is concerned. Then there is paragraph 46B, which says that if it can be applied to rent concessions occurring as a direct consequence of the COVID-19 pandemic only, and if all the following conditions are met. Revised consideration is substantially the same or less. जो आपको consideration मिलने वाली है या lessee की side से जो consideration आप pay करेंगे, it is significantly less. Suppose the earlier rent was say 1 crore rupees. Now it's going to be say 90 lakh, 80 lakh, or 70 lakh rupees, or maybe a complete waiver also. And the reduction in lease payments affects payments originally due on or before June 30th, 2021. This is a guess that maybe by 11 months from now, this pandemic will be over. So that's why June 30, 2021 has been thought of as a date. Otherwise, there is no other reason. And there is no substantive change to other terms and conditions of the lease. And if these three conditions are satisfied, and if the lessee decides to use the practical expedient, then some disclosures also needs to be given. And these are specified in para 60A, which says that the following should be disclosed. One, the practical expedient which has been applied that meet the conditions in para 46B, which we just now discussed. And if it not applied to such rent concession, information about the nature of contracts to which practical expedient is not applied, and the amount which is recognized in P&L as a use of this practical expedient which is given in para 46A. Now, the effective date in India for this change is April 1, 2020. But then we also thought that it's possible that there are large number of multinational corporations in India who follow a calendar year as the financial year after taking due approval under the Companies Act. And if that be so, the benefit should be extended to them as well. So what's been provided is if the financial statements are not yet approved for issue before the issuance of this amendment, then the same may be applied for annual reporting periods beginning on or after April 1st, 2019 as well. So this significantly extends the benefit even for the year which is just closing if the accounts are still not finalized as on the date of issuance of this amendment. And there are many accounts which are still being finalized, particularly for the unlisted entities, and not only unlisted entity, even for listed entity, the date was extended up to 31st of July. So it's quite possible that many preparers of the financial statement may have used this relaxation. And for the transitional provisions, say for example, if someone is applying this for the first time in this year, if they're applying the retrospective effect method, then the cumulative effect of initially applying the amendment will be recognized as an adjustment to the opening balance of the retained earning or any other component of equity as may be appropriate. And in the reporting period in which a lessee is first applying this COVID-19 related concessions, they will not be required to disclose the information required by Ind AS 8. Now, this is very interesting set of journal entries, which was prepared by the IASB staff in their agenda reference 32B in April 2020, how to account for the change in the lease payments for the entities who are applying this exemption. And let me take these 4 cases. When there is no change in the lease payments, in that case, now this has been assumed that there is a lease liability of 2,000 and there is a monthly lease payment of 100 and interest is 20 per month. Now, in this case, for a 3-month period, let us say it is March to May. In Indian context, it could be also January to March. It could also be April to June. but a lease amendment could have happened at any point of time. Now, assuming there is no change in the lease payment, so this is the first scenario that we are discussing. So in normal case, the lease liability is 300. So here also it is 300. Lease liability will be reversed by 300 and a payment of 300 will be credited lease liability to cash from a lessee's point of view. And since we have said interest is 20 per month, interest which will be debited to P&L will be 20 into 3. A total of 60 will be debited as interest. And since the payment of 300 is made and this was 2000, so what we will do is 2000 minus 300 plus 60 of interest. So this makes it 1760. So 1760 is the lease liability on 31st May 2020. And in the next quarter also, it will be 300 and 60 is the interest. So if I have to see, then it is 1760 minus 300 plus 60. So you get 1520 as the lease liability on 31st of August. Now consider a second situation when there is a complete waiver of lease payments. And in this March to May, there is no lease payment, absolutely. So instead of saying lease liability to cash, we are crediting this benefit to the profit and loss account, treating it as a negative variable payment. So lease liability to P&L. This is a benefit which is accrued in P&L to the extent of 300 and interest of 60 will still be charged. So there is a net benefit of 240, whether it is INR or dollar or whatever in this quarter of March to May. Now there are various considerations whether this lease related to P&L is to be treated as an operating item or a non-operating item. To my mind, actually it could also be operating. It's not been clarified anywhere, but it could also be operating because it's actually in the nature of rent, and rent is an operating expense. So still the lease liability will still be the same as on 31st May 1760. How it comes is 2000 minus 300 which has been reversed plus 60 rupees of interest. So we get to 1760. So in both the cases, lease liability in the balance sheet will be the same as 1760. And in the next quarter, the entries will be usual lease liability to cash and P&L to lease liability, and the lease liability on 31st August will also be. So the difference is that in this case, 240 benefit is being credited to P&L in this first quarter. Now, let us consider a third situation where the lease payments are only deferred, but these are not waived off. So in the March to May quarter, again, treating this as a variable lease payment, nothing will be debited to lease liability. So, I mean, the lease liability to cash or P&L, this entry will not be there. Interest will be 60. So now the lease liability will be 2000 plus 60, 2060 on 31st of May. And in the next quarter, when the earlier payment also is to be made, so lease liability will be debited by 600 to bank 600. Interest will continue to be 60. So what we will get is 2060 minus 600 plus 60. Again, it will be 1520. So here there is a change if I have to compare from when it is completely waived off and to as compared to when it has been deferred. Now consider a fourth situation when it is partially deferred, and when it's partially deferred and partly forgiven. Say in March to May, there is no lease payment, and June to August, instead of 100, it will be 160. So you'll be paying 480 instead of 600. So basically, the waiver is 120. We can recognize this waiver in March to May. Lease liability to P&L as a negative variable payment, and interest will continue to be 60. So now the lease will be 2000 minus 120 plus 60. It comes to 1940 on 31st of May. And in the next quarter, lease liability will be 480. There'll be an outgo of 480 and interest will be 60. So in this way, our lease liability will be 1940 minus 480 plus 60. Again, we will arrive at a figure of 1520. So the lease liability on 31st August 20 will be same in all the four scenarios, but in the on 31st May it will be different depending upon whether it's forgiven amount or it's a deferred lease payment or it is partially deferred and partially forgiven lease payment. So this is how the entries will be made in this situation. So basically, this is the benefit. This is the manner in which the benefit has been extended by way of an amendment to Ind AS 116. Benefit accrues in the profit and loss account in case the lease rental is waived off. In case it is deferred, it's only a cash flow deferral, and there is no other benefit which is associated, and this can be recognized in P&L. And as we said, although there is no specific clarification which has been issued whether it's going to be operating or non-operating, but as I said, since rent is an operating expense, this could also be treated as an operating income. So this is the key amendment in Ind AS 116, and with this we come to the end of the amendment in Ind AS 116. I hope I've been able to clarify using the help of the journal entries and also explaining the provisions. And I would like to hand it over back to the host for the day, CA Yagnesh Desai. Thank you very much. Yagnesh bhai, you're on mute.
Thank you very much, Dr. Saab. It was a wonderful deliberation and you have dealt with nitty-gritty in the most simplest manner. अब लगता है कि इतना difficult नहीं था जितना हम सोचते थे. All right, thank you so much. Appreciate, and this is the hallmark of you. This is the hallmark of you. And now I invite CA Vidyadhar to debate on 107 and 109. Am I right, sir? Yes. Again, a very technical issue. So please welcome and let's उनकी जुबान सुनते हैं क्या changes है. Welcome, sir.
Yeah. Thank you, Agnesh. Just let me share my PowerPoint presentation. I hope the PPT is visible too.
Yes.
Yeah.
Yes.
Yeah. At the outset, I would like to thank the torchbearers of ICAI, President Shri Atul Kumar Gupta ji and Vice President Nihar Jambusaria ji, and our Chairman of Accounting Standard Board, MP Vijay Kumar ji, and then our Vice Chairman Dr. Sanjeev Kumar Singhal ji, for organizing this technical session on recent amendments. This is a very sort of I would say that a good program to create sort of a quick awareness among the people of the latest changes. So for the I would like to thank the torchbearers and the CEO, the leaders of our profession for giving me an opportunity to actually just to brief on one of the important changes in the Ind AS world which has happened recently, and this is going to be useful for the accounting year 2020 and 21, as well as for the interim financial statements if the entities are preparing. So it will be useful there as well. And one of the important thing I would like to just at the beginning mention is the views here expressed by me are my personal views, and as our standard practice and protocol of the technical directorate, the final views and the opinions, etc., are only expressed by the Accounting Standard Board or Council of the ICAI. So this is with a small caveat. I thought I should draw your attention. And once again, welcoming you all the members for this session. And on a Sunday, you have taken time off from your weekend and attending this technical session. That shows your interest in this subject. So with this initial few words, I will start with what is the change that's happening with reference to these two standards which relating to financial instruments. The one is the Ind AS 109, which talks about recognition and measurement of financial instruments, and then Ind AS 107, the disclosures relating to the financial instruments. So before I get into the nitty-gritties and details of the technical the standard amendments, I will just give you a little background about the timelines on standard setting. Like Agnesh ji mentioned earlier, that our Ind AS, they are derived from IFRS standards, high quality, globally acceptable accounting standards. So as and when the IFRS standards also undergo changes, we do here in India closely monitor those developments, and in order to benefit the industry and the stakeholders and the nation as a whole of convergence with this standards, we also immediately take up these for making amendments to our Ind AS. And of course, we do go through elaborate standard setting process as well in India. That is the sort of a consultation with our Indian stakeholder, etc. That due process we do follow. And as you can see, this slide basically just gives you a overall timelines where at the international level, IFRS standards level, the standard was amended in September 2019, and then very quickly from October 2019, we took up the task, and by December, within a span of 3 months, we concluded at the ICAI level up to a council level of reviewing those amendments and making the recommendations to Ministry of Corporate Affairs and NFRA for taking up the next step of the notification under the Companies Act. As we all know, under Section 133 of Companies Act, all the standards, whether Ind AS or accounting standards, they are formulated by ICAI and then recommended to the Minister of Corporate Affairs, who then notifies this. This was actually done by us in 2019 December, and then yes, of course, we do have some more processes of due diligence, etc. And that after going through that, recently in July 2020, Ministry of Corporate Affairs has notified. And yes, some of you might say that why it was a couple of months delay. As you all know, we were in the midst of this COVID crisis, so to some extent that has also caused a bit of a delay in notifying standard. But please remember, the standard is applicable for accounting periods beginning on or after April 2020, and these amendments are applicable to interim financial statement as well, based on the requirements of Ind AS 34. Next, now, what was the need for making this changes in Ind AS 109 and 107? Basically, some of you might be aware that as far as the interest rate benchmarks are concerned, there were like LIBOR or MIBOR, or you can say TIBOR, Tokyo Interbank Offer Rate. There was some reforms were going on how these interest rate benchmarks are set globally, and why this reform was going on. You would recall that during the global financial crisis of 2008 and 9, subsequent to that, it came to the attention of the G20 and Financial Stability Board of G20 that there were some sort of inappropriate practices followed in setting some of these interest rate benchmarks, or sometimes they are called interbank offered rates, IBOR. one of the most important one is which most of us are familiar is LIBOR, London Interbank Offer Rate. There were some problems with reference to the due diligence and how these are set. So the Financial Stability Board, few years ago in July 2014, issued a recommendation to all the central banks and to the capital market authorities to actually look at how these major benchmarks are set and bring out more transparent and the best practices in setting these rates. So that caused some sort of an uncertainty. For example, by now it is many of us know the roadmap that US dollar LIBOR is getting replaced by a new benchmark called SOFR, Secured Overnight Financing Rate. Similarly, the GBP LIBOR is getting replaced by another benchmark, which is Sterling Overnight Interbank Average Rate, which is an acronym used is SONIA. So when these kind of changes were sort of likely to happen, it caused sort of uncertainty in the whether these rate LIBOR etc. how long will they stay or not, and if there is a new one is coming, how it will come, when it will come. These uncertainties were there, and these uncertainties actually causes some problems in making a forward-looking assessment in our accounting standards. Say, for example, in the India's 109 or the global standard is IFRS 9, especially with reference to the hedge accounting requirements. Hedge accounting requirements require you to make certain forward-looking estimations and assessments. In next few slides, I'll explain you a couple of instances where this amendment has happened and what are those forward-looking scenarios. Just take an example, like if an entity has borrowing, which is interest payment on that are based on a LIBOR, and say it's a US dollar based one, and the this bond goes on up to 2024, and interest payments are made on a quarterly basis based on what is the LIBOR, which gets reset every 3 months. So if this was used, this risk of variability in this LIBOR interest cash flow was hedged through an interest rate swap linked to the LIBOR and a cash flow hedge accounting. So in this scenario, when you have to make estimations up to 2024, like when you are valuing fair valuing the interest rate swap to assess the hedge effectiveness, etc., you need to actually make a forward-looking assessment. And if this LIBOR itself is going to, there is an indication that it's going to change, this caused an uncertainty of how do I actually, in applying the hedge accounting requirement, what should I do? In some cases, if this amendment was not there, this would have led to a discontinuation of a hedge accounting. So because of this reason, the standard setters thought that this may not be a appropriate way, simply because there is some uncertainty caused by this reform event that one need to discontinue the hedge accounting. So that's why this change, these changes have been were proposed and have been now made in the standard. And again, remember one thing: this interest rate benchmark reform, or commonly known as IBOR reform, in interbank offer rate reform, has two impacts. It is getting addressed in two phases. One is the current one, which we made amendment, that is called a pre-replacement issue. Before this, the reforms happen and these benchmark rates get replaced, what are the impacts and what is the change in the standard required? And actually, when that happens, what are the changes? That is the post-replacement issue. Phase 2, that standard setting is still going on. So what I'm going to today talk about here is all about the phase 1. So now, there are 4 changes which are happening in Ind AS 109. And what are the changes? The first change is basically, as you all know, there is a requirement of a highly probable assessment of high probability of a forecast transaction when you're looking at cash flow hedges. So it is in paragraph 6.333. So when you have to make this assessment of whether a forecast transaction, like for example, if you are going to issue a LIBOR-based foreign currency convertible bond, maybe after 6 months down the line, it doesn't happen overnight. Entities do start preparing for that in advance, and that cash flow, future cash flow, can also be hedged through a cash flow hedge. So when making that assessment, then you need to look at this, make a forward-looking assessment, like whether LIBOR remains or it doesn't remain. So in that, this caused a problem of applying paragraph 6.333. So that's why, as a practical expedient, like we saw in 116 earlier, the leases, a practical expedient was given. Similar way, for this change, and a practical expedient has been given, and a paragraph 6.8.4 has been added, which says that when you are making this assessment, you assume that this interest rate benchmark on which this future cash flows are going to be there is not going to be altered as a result of a interest rate benchmark. What it simply says is, currently you assume that the LIBOR or the NIBOR, etc., which is there, it continues. So yes, this is a temporary relief given, but as we have seen that at some point of a time, it is actually getting replaced by new benchmark, and so the uncertainty ends that point of a time. So to capture that, this relief is not going to be there forever. So that's why the standard also provides that when will this practical temporary relief which is applied end? Basically, it says that when that uncertainty arising from that ends. So basically, if you are saying that if the like in India, for example, the MIBOR, etc., got reviewed and a new system came in place a couple of years ago, like that, when this new system of a new rate, which is say in case of a GBP LIBOR, Sonia, that by end of 2021 or so, it is expected to come into place. At that point of a time, then you discontinue using this temporary relief. Or if the entity, that entities can also discontinue the hedging relationship, at that point of a time, this application of this relief, temporary relief, has to end. And the another relief which was required was, as we all know, if your one is following a cash flow hedge reserve, cash flow hedge accounting, initially the cash flow, the impact of the hedging instrument is actually held into a cash flow hedge reserve within equity until the actual cash flows of that hedge risk or hedged item start affecting the profit and loss count. So until that point of a time, the fair values of the financial instrument or a derivative instrument which is used to hedge that is parked into the cash flow hedge reserve. So when you are doing this, for example, there are situations when the entity discontinues the hedge accounting, but paragraph 6.5 12 of the Ind AS 109 currently allows that whatever amount you have parked currently in the cash flow hedge reserve, you can continue to keep it until the future cash flows of the hedged risk or hedged item happen. So for this purpose, the entity is expected to make an assessment whether those future cash flows are expected to occur or not. So this is also a scenario where if these cash flows, future cash flows are linked to this the benchmark, then there is an uncertainty arises. How do I assess the future cash flows will happen or not? So same way like the earlier relief, the relief is given that you assume that because of this reform, currently what you have assumed, what the benchmark you have assumed, and the cash flows which you have assumed will not change. So again, this is also not going to be a permanent relief, because one day, some point of a time, this uncertainty gets resolved, So one need to end the application of relief at the time when this uncertainty of around about the timing and amount of this interest rate benchmark reform is resolved. Or we know that cash amount accumulated in cash flow hedge reserve in some circumstances in 109 gets amortized over a period of a time. So if the amount in that is zero in cash flow hedge reserve, that is also a point of a time when you actually sort of discontinue application of this relief. Next, another area is which is it's applicable sort of both to a cash flow hedge and a fair value hedge. We know that as a hedge accounting qualifying criteria, the entities need to assess whether there is an economic relationship between the hedged risk and the hedging instrument cash flows. So when you are making this assessment, obviously one need to make a forward-looking information as well, like because this assessment has to be made over a period of this hedged risk. It could be 3-4 years down the line, some period of time. So when you are making this kind of an assessment, because of this interest rate benchmark reform, what is the sort of an entity is supposed to do? Same way here also relief given is that you assume that the cash flows relating to the interest rate benchmark, whether they are contractually or non-contractually specified, they are not going to be altered because of this reform. So you basically what you knowing all these three amendments, now you might be gathering is when this reform is going on, until that certainty is there as far as the reform happening, you be sort of close your eyes to what is happening there and continuing with the existing whatever benchmark system is there, reference rate system is there. So that's what this this amendment also suggesting. And another important amendment also is made is when you are actually designating hedged item, one can actually designate the entire hedged risk or hedged item or a component of a risk. For example, if you are giving a loans which are based on say for example certain interest rate benchmark plus certain margin on that. So say for example in India, if you are giving a loan to a customer, say MIBOR plus 3%. So in this scenario, you can actually specify the MIBOR as a specific component interest rate benchmark, or you need not specify it in a contract. But when you are actually offering the rate to customer, this may have been a factor in that. So the standard allows you to designate that component of this interest rate which is linked to this interest rate benchmark as a hedged risk. So when you are making this assessment, one of the requirements in the standard Ind AS 109 is that whether that particular item, the one which you quoted, the MIBOR, or it could be a LIBOR, whether is it separately identifiable and reliably measurable or not. So that assessment one need to make. So the question arises here also whether if there is a hedge risk is continuing for about say 3 years or so, this loan, then every time quarterly the reset etc happens, you need to really look at is it separately identifiable or measurable or not. So because of this change happening in interest rate benchmark, a question arose, should I keep doing this assessment every time a reset happens, or what should I do? So relief given here is that no, only at the initial stage, inception of the hedge relationship, you do that, and subsequently you need not do that. That is the practical temporary relief which is given when you're designating a component of an item as a hedged item, and this component is basically which is a one getting affected by the interest rate benchmark reform. Now coming to these are the 4 changes which are happening, which have been made in Ind AS 109, And some of you might say that how does it affect? It is all relating to LIBOR and reforms happening in other places. But remember one thing: in India also, a lot of corporates have their exposures or some of their bonds and borrowings and things like that, which are linked to the international benchmarks like LIBOR, etc. So that's why it is important that this amendment, although in India, like our MIBOR and other interest rate benchmarks are not getting affected or not going through any reform right now, they have already gone through reform before 2014, but this is still applicable in DS 109. This amendment, it will be useful to many of our corporates. And when is this going to be effective? It is, as I mentioned earlier, effective date is 1st April 2020 onwards, annual period. And retrospective application is also permitted. Very limited retrospective application. It only says retrospective application for the interim financial statements, not to go back 2 years ago, which you discontinued hedge and reinstated. That is not the retrospective application intended here. So next one quickly, Ignesh, I will close this in next 2-3 minutes. And another important change which is happening because of this 109 an amendment in hedge accounting requirement is in 107 there are disclosures relating to financial instruments. So basically what these disclosures required because of this amendment are: what are the significant interest rate benchmarks to which the entity's hedging relationships are exposed, and how the entity is managing that transition to the new alternative benchmarks, and what are the sort of the other assumptions and judgments made in applying these exceptions, and then what are the nominal amount of the hedging instruments in those relationships. So basically, to give the extent of the quantitative information and quality information to which these practical reliefs or temporary reliefs which have been applied by the entity, that's what is the disclosure required. And with that, I would like to sort of conclude on this quick information about the changes which are being made in an important standard, Ind AS 109 financial instruments, and the disclosures around the financial instruments Ind AS 107. So with this, I will hand over Ignesh to you.
Thank you, विद्याधर जी. मेरे साथ और भी लोग सहमत होंगे कि फाइनेंशियल इंस्ट्रूमेंट्स के स्टैंडर्ड्स काफी चुनौती देते हैं सर. वेरी डिफिकल्ट टू अंडरस्टैंड. एंड जब भी हैज अकाउंटिंग लाइबोर आता है तो वो समझना बहुत मुश्किल हो जाता है. बट आपने बहुत बखूबी से निभाया अपना रोल. एंड जो लास्ट में आपने कहा कि भाई, हेलो,
yeah.
Okay, sir. And you mentioned very, very well that how we are going to be affected by LIBOR and IBOR and all kind of thing. But quite rightly pointed out by you, Vidyadhaji, that many companies have borrowed money internationally. So those entities which have an exposure internationally, for them it's of great and immense help. And now we will see some material items from none other than Parminder Kaurji. CA Parminder Kaurji. She is a Deputy Secretary, a staff member of Accounting Standard Board, and वो काफी मेहनत करते. इनका अनुभव मेरे, I mean, I have interacted with her many occasions, but she works very hard, like all other Accounting Standard Board member, including Vidyadharji and all the. So now we'll hear from her the changes in IAS 1, Ind AS 1, and Ind AS 8. So over to you, Parminderji, and we'd like to hear from you the changes made out in this standard. I believe they are mostly concerning materiality. Am I right, Parminderji?
Yes, sir. Yes, sir.
चलिए सुनते हैं आपकी जुबाने क्या क्या चेंजेस लाए हैं.
Thank you so much, Yakesh.
Looking forward.
Thank you so much, and my thanks are due to Chairman, Vice Chairman of ASB, Secretary ASB, and Head Technical Directorate for their guidance and for this opportunity. So I'll directly go to my topic. I'll just share the slides first. Yeah, is it visible?
Yes, ma'am.
Yes.
Yes, ma'am. Yes, ma'am. Yes, ma'am. It is visible.
Uh, So the topic for the discussion is that one of the areas of amendments for this notification, this is amendments to basically Ind AS 1 and Ind AS 8. These are with regard to the definition of material, which is given in Ind AS 1 and Ind AS 8. And these are coming from the amendments in IAS 1 and IAS 8. Um, yeah. So, as you all are aware that we have converged and we have already implemented IFRS converged Indian accounting standards. So whenever there are amendments in IFRS, we also consider in India whether we should also incorporate those changes in Ind AS, and we follow due process as already mentioned in the previous uh, topic by CA Vidyadharji, that we follow a due process wherein we consider the amendments issued by IASB, we go through it, we consider how its relevance in India and whether any change is required or not. Then we issue the exposure draft and we seek public comments, and those comments are considered by the Accounting Standards Board. And thereafter, we go to the council with the draft recommendations of the board on those changes, and thereafter those changes are recommended to MCA, and MCA in consultation with NAFRA as per section 133 of the Companies Act notifies these amendments. So a whole lot of steps are involved in coming up to this stage of notification and finally implementation. So all those process steps were followed in this case also. Then coming to the amendments, basically materiality is very all pervasive in our accounting standards and Indian accounting standards. So we consider materiality from the perspective of even when we apply the requirements, recognition, measurement. Parminder, this side, I am giving the presentation. Is it visible?
Yeah, but the slide show में नहीं है. हाँ, वो आप उधर, हाँ, बस now is there.
Yeah.
So basically, materiality we consider while applying all the provisions. We apply recognition, measurement, disclosure, presentation, all the requirements of Indian accounting standards if their impact, their effect is material. Basically, so what is material, that is determining what is material is very much important for applying the accounting standards in context of financial statements. So actually IASB also considered how materiality is being applied by the entities while preparing their financial statements. So it was observed that materiality is being applied very mechanically. The definition of material is applied very mechanically. Omissions, misstatements should not be there. This is the primary objective which is considered while applying the material definition. So therefore, to provide guidance to the stakeholders and preparers of financial statements, IASB came out with an IFRS practice statement, which is the making materiality judgments. That is, basically this is entity specific concept, which entity has to determine what is material. So one has to exercise some kind of judgment to determine what is material. Therefore, in order to provide sufficient guidance, IASB came out with the IFRS practice statement, making materiality judgments. So this practice statement provides guidance as to how to apply materiality. And this IFRS practice statement is available on ICAI website also as guidance material along with the Indian accounting standards on ASB's knowledge page. So you people can always access this kind of guidance while applying the materiality. Then coming to the changes which have been made, I think let us go through the definition which was there for the material, which was there till now. The definition was omissions or misstatements of items are material if they could individually or collectively influence the economic decisions that users make on the basis of financial statements. We stop here, and I would like to see here that what were the issues which were considered that which can be clarified. Before we get into the clarifications, one important aspect is the changes which have been made in the definition of material, or not to change the intent of the material. These are to clarify what the material was so far and what is how to determine material. So to supplement the understanding of the material definition, certain changes have been made. So the issues which were considered by the IASB as a part of its disclosure initiatives project, in the definition of material, certain issues were considered. Like, first part was omissions or misstatements of items are considered material. So it was felt that the focus was too much on the omissions and misstatements, that anything should not be omitted or misstated in the financial statements, so that every material information goes to the readers. So at that point of time, it was thought that something more was required to be clarified. So what was clarified, we will see in the next slide. Then the other issue which was considered relevant for the which was thought that can be clarified was that such omissions and misstatements could individually or collectively influence the economic decisions of the users. So could influence the decisions of the users was too low and too broad term. That means the users or the preparers, they were giving too many disclosures, because anything could impact the decisions of the users. Therefore, it was thought fit that this could, this too low and too broad term should be further clarified, that what kind of disclosures should be given. Then the third thing which was identified as an problem area was the users, that all kind of users were addressed in the current definition of the material. That is, all the users, all the information which affect the decisions of the users. And who were the users, that was not clear, and it was sometimes it was mostly interpreted in a very broad sense, that all the users of financial statements were considered to be the users. And the fourth part, which the issue which was considered relevant for the clarification, was that the conceptual framework has been issued by IASB, and in India also, for standard setting purposes, ICAI has come out with the conceptual framework, which is there, and which would become applicable for the preparers shortly. That would be notified shortly on in the due course of time. So the conceptual framework also referred to the term material. It also dealt with the term users. So it was thought fit to align the terminology here and the intent here with the conceptual framework. So these were the areas which were identified as a part of this revision project or the amendments project, which were thought to be clarified in the definition. So accordingly, the new definition has been issued under Ind AS 1. The definition now says that information is material if omitting, misstating, or obscuring it could reasonably be expected to influence the decisions that of primary users of general purpose financial statements they make on the basis of those financial statements which provide financial information about a specific reporting entity. So first addition which they have made, which has been made in Ind AS 1, is obscuring. Not only omitting and misstating could result into impacting the decisions of the users or primary users, but obscuring could also impact the materiality aspect, which could influence the decisions of the users. So obscuring word has been added, that important information should not be obscured. This is the one clarification which has been added in the definition, and how information can get obscured we will see in the next slide. Then the second aspect which we saw in the last slide, that the too much information was given on the to meet the definition of material, because there was word could influence the decisions. So now it has been changed to it could reasonably be expected to influence the decisions. So which you feel that it could be estimated that this information can influence the decisions. So those information you have to include in the financial statements, and therefore the wording has been changed to it could reasonably be expected to influence the decisions. Then the third aspect which has been clarified in the definition of material is users have been replaced with the primary users of the financial statements. This term is used in the conceptual framework also. Earlier, the users term was covering all the users. Now, only primary users of the financial statements. And who are the primary users of the financial statements? That we will also see the explanation in the next slide. And then all these things together would become material if they would impact the decisions of the primary users of general purpose financial statements, which they make about the reporting entity, the specific reporting entity who is reporting this material information. So this is the new definition which has replaced the earlier definition, and effective date of this amendment is also 1st April 2020. So this is applicable prospectively from the financial year 2021. Then we have seen the term obscuring has been added in the material definition. So what is when an important information can get obscured? Entity has to make judgment that important information is not obscured by any immaterial information. So certain examples of this, when you can say that important information is obscured, material information is obscured, certain examples have been given in the standard, like the information given is very vague and unclear in language. Then we can say that the important information is getting obscured. Information is scattered throughout the financial statements that you cannot understand. It doesn't make any sense to the readers. So that should not be the case. Then dissimilar items and transactions or other events are inappropriately aggregated. In financial statements, we aggregate the similar items so as they make sense to the readers. But if inappropriately dissimilar items are aggregated, they also result into obscuring important information. And sometimes similar items are, instead of aggregating them, they are disaggregated and they are shown at different places, and they are not put together. So sometimes they also do not make any sense. Then information can get obscured if material information is hidden by the immaterial information that a primary user is unable to determine what information is material. So these are some of the examples. These are some guiding lines on which basis one can determine whether an important information is getting obscured or not. So if important information is getting obscured, then it is equivalent to omitting or misstating the information. So this is the guidance given in the Ind AS 1, wherein you determine how to determine the material. Then the second aspect in the definition was primary users. Who are the primary users for the purpose of while preparing financial statements? You have to consider in your mind that two whom your financial statements are directed. So these financial statements are directed to the primary users of the financial statements, such as existing and potential investors, lenders, and other creditors. There can be other users also of the financial statements who can refer to the financial statements to take to understand about the entity and to take any decision. But the standard clarifies that for the purpose of determining material, you have to consider the primary users of the financial statements, how they would take decisions on the basis of the financial statements. Like primary users can make various kind of decisions about the entity on the basis of financial statements. So those users one has to keep in mind, and there can be other users like regulators, management, members of the public. They may also be interested in your financial statements, but they are not the primary but our financial statements are not primarily directed to those parties. So while preparing financial statements, primary users would be the point to whom our financial statements are directed, and considering that material has to be determined. Then the second aspect in this context is in assessing whether information could reasonably be expected to influence the decision of primary users, entity must consider the characteristics of those users as well as its own circumstances. That means it is not only the primary users while determining what is material, because it is something judgmental. You have to judge what is material. So for primary users, one has to see their attributes, like who are the primary users, what are their needs, what information they are seeking, what information they would like to see from the financial statements. For example, a prospective or or a potential investor may like to understand what are the resources of the entity, that is, what are the assets of the entity, what are the obligations, that is, liabilities of the entity, what is the equity of the entity, what are the changes in obligations and the income and expenses of the entity, how management is managing the entity's resources, how it is managing its obligations. So all this kind of information could be the need of the users. So all these requirements, the needs of the users have to be kept in mind while determining materiality. Another important clarification which has been given in this amendment is that materiality is entity specific aspect. And so while determining the entity, you have to consider the nature and magnitude of the information. Even if we this was earlier also there in the definition part, like for determining the materiality, you have to see the nature and amount of the information. So now that portion has been shifted to the explanation part of the standard, and here it is clarified that materiality would be determined on the basis of nature and magnitude of the information. An entity, apart from nature and magnitude, the entity would also assess whether the information individually or in combination with any other information is material in the context of financial statements. There can be some information which is individually may not be material, but when we see it along with some other relevant information, this could be material. Therefore, while determining materiality, one has to see information from individual point of view as well as in combination with the other information. This could be material. So these were basically the changes in Ind AS 1 in the definition part as well as guidance given on the application of materiality and the other aspects of the materiality. Then corresponding changes have been made in Ind AS 8 also, because at present material definition was appearing in Ind AS 1 and Ind AS 8. So for this was the position, and some of the aspects were clarified in Ind AS 8. For example, the nature and size of the item. could be material, could determine the materiality. So these two aspects were dealt in Ind AS 8 as well. But now it has been felt appropriate that will give definition in Ind AS 1 only, and Ind AS 8 would make simply reference to Ind AS 8. So paragraph uh, has been deleted with regard to the definition and explanation part, and reference has been given to Ind AS 1. And this all these amendments together are applicable prospectively from 1st April 2020. Apart from Ind AS 8, there are some reference to materiality in Ind AS 10, 34, and 37. So there also language related changes have been made in line with the definition of Ind AS 1 material. So these amendments are also applicable along with Ind AS 1 and Ind AS 8. That is, it is clearly mentioned that when one applies amendments of definition of material given in Ind AS 1 and 8, these amendments in these standards would also be implemented. So this is with regard to the materiality. That is all from my side. यज्ञेश जी।
थैंक यू परमिता जी, आपने मटेरियल पे काफी मटेरियल हमें दिया। हाँ जी, मटेरियल पे आपने हमें काफी मटेरियल दिया एंड हमें अवगत कराया। एंड सबसे बड़ी बात तो आपने कही कि ऑब्सक्योरिंग दिस द चेंज, दैट मीन्स जो इंफॉर्मेशन नहीं देते, मिसस्टेटमेंट की बात तो साइड पे रही, मगर जो चीज देते हैं इतनी ना दी जाए कि जिससे लोग गुमराह हो जाए। I think that was your point, am I right, sir? By saying the word obscuring, जो कहना चाहते उसके वो नहीं कहते, पर कुछ और ही कह जाते, है ना, गुमराह करते, डिसगाइड करते हैं। वेरी गुड। एंड दूसरा आपने चेंज बहुत अहम बताया कि यूजर्स नहीं बल्कि प्राइमरी यूजर्स, काफी बदलाव आया है। सो यूजर्स का स्कोप कम कर दिया। एंड कंसिक्वेंशियल चेंजेस इन डेज 10, 34 एंड 37। वेरी गुड। तो काफी इंफॉर्मेटिव था। And it's good because materiality is something which is pervasive, as you have mentioned earlier, and that determines whether a particular accounting treatment is to be given to a particular item or the transaction or not. And अब सुनते हैं अपराजिता सरकार जी, जो हमारी एक स्पेशल इन्वाइटी है अकाउंटिंग स्टैंडर्ड बोर्ड की, एंड काफी उनका भी योगदान रहा है। अब उनका बिजनेस क्या है, आई मीन सॉरी, उनका एजेंडा है बिजनेस की डेफिनेशन पे करना है, एंड दैट इज रिलेटेड टू Ind AS 103 business combination. Ind AS 103 says that if if acquirer acquires the business, then only Ind AS 103 is applicable. Otherwise, other relevant standard may be applicable, like Ind AS 16, Ind AS 38, and so on. So ये बहुत अहम है, जरूरी है कि the what acquirer is acquiring is a business or not. And now to explain these changes is the business of Aparadija. Welcome, Aparadija. Welcome. I think you need to share your slide.
Yeah, I'm just trying to share. It's taking some time.
Yeah. No problem. No.
Yeah. Thank you, Yagnesh ji. Thank you, Sanjeev Signal ji, and Vidyadhar ji, Parminder ji, and the support team at ASB, as well as all professional colleagues and friends who have joined this outreach. So as Yagnesh ji has so already explained what is the topic, so I'll go directly to the actual presentation. So we will be basically discussing a summary of amendments, because the amendments, before I go further, I would say that the amendments are actually in the form of clarifications. They are not really changing any recognition or any measurement principle of Ind AS 103 or of IFRS 3 for that matter, but they are giving some guidance and clarification, and these are incorporated in the standard itself. So that is the main purpose of these amendments. So we'll discuss the summary, and then we'll discuss the Appendix A, definition of business, which is where the changes and also the application guidance, only certain paragraphs where we have some, where the guidance has been issued or the primary guidance. So the summary, the ISB, that's the IFRS setting body, had felt that the definition of business was not very clear. That is from the feedback of constituents, and during their, after a new standard is issued, after a few years, they do a post-implementation review, and in that it came out that the definition of business was not very clearly understood by a lot of entities, and therefore the objective was to clarify that. And the objective was basically to clarify what is a business combination and what is an asset acquisition. Because as we all know, that would carry a lot of changes in the accounting, and a business combination some is where with Ind AS 103 is applicable. And for an asset acquisition, the respective standards would be applicable and not 103. Therefore, the importance of understanding what is a business. So it sounds very simple, but the definition of business as per Ind AS 103 does require clarification. So we'll go into the part, the definition, the amendment of the definition of business in detail, but it's basically what they have done is the goods and services which are provided to customers has been included in the definition. So this is, earlier it was not there in the definition of business. It was basically, of course, dividends was there, and there was a reference to lower costs and other economic benefits. So the standard has removed that from the definition and introduced goods and services provided to customers. We'll see why that was done. Then they have added an optional fair value concentration test. So this is a very simplified assessment to whether the activities which are purchased are actually a business or not. The entity has an option to actually see whether it is there. So if the fair value is basically concentrated in one asset or a group of similar assets, so then it would say that obviously it is not a business. It will be an asset purchase. But again, this sounds very simple, but there's a lot of clarification and guidance around it, how to do it. And for all this, other than the guidance, examples have been added in the illustrated examples of IFRS 3. To continue the summary, so the major change in business, we can recall a business earlier, and even now, the elements of business are basically the input, process, and output. But constituents, that is entities, gave a lot of importance to output. So now the change that has been clarified is that to consider a business, it should include an input and a substantive process, which together significantly contribute to the ability to create outputs. So it is not that it already has the complete ability to create outputs. It may have that, but it could also be that it significantly contributes to the ability to create outputs. So they have put that so in other words, what is minimally required for a transaction, a purchase transaction, to be called a business purchase would definitely require an input and a substantive process. Business, so that has been explained in the BCs that it can exist without having the output. So that is what is mentioned there. So, and what is relevant is what is being seen, whether the set of assets and activities, they can be conducted and managed as a business. And it is the characteristics of the assets and the activities which are purchased or which are acquired that is important. It is not the objective of the acquisition. This has been made clear in the BCs that it is not the objective. For example, there could be a manufacturing equipment could have been purchased with the objective of lowering costs, but that may not be identified as a business purchase. as per this particular standard. So we'll go into each of these amendments a bit more in detail, the reason why they've been done. So the first change is in Appendix A, which for any standard always has the definitions. So here also the definition of business is included in Appendix A, and the definition of business has been amended. So here it says that if you see here, the integrated set of activities and assets that is capable of being managed for the purpose of providing goods and services to customers. So this is some portion which has been added and which was not there earlier, and they have removed in the form of dividends and lower costs, economic, and the reference to economic benefits directly to investors, other owners, members, or participants, market participants. So all those things have been removed, and they have included this portion. And the very important thing is that from when is this effective? It is effective from 1st April 2020. That would mean any business combinations which have occurred on or after 1st April 2020 would need to be seen in this context. There may not be changes, but there may be changes, so the guidance has to be considered. And of course, if something, that guidance, so it's asset acquisitions also. So even if there is an asset acquisition, there also this particular clarification or this test has to be seen, that just in case it is actually a business combination, or rather an acquisition of business. So it's also effective from the same date because it's in the same standard. The main amended, I would say, is the amendment in output. The amendment in business is actually a consequent amendment of what is there in output. The reason is because as we knew, business consists of, the elements of business consists of inputs, processes, and output. So the triggering amendment is or the explanation rather, I would say, the clarification, triggering clarification is in the definition of output. So if we see here, that what has been mirrored in the definition of business is that the output says the result of inputs and processes applied to those inputs that provide goods or services to customers, generate investment income. They have retained the reference of dividends and interest, or generate other income. So that portion has been retained, but they have removed the reference to lower costs and other economic. So we'll see the reason why they have done. If you see here, the reason why they have done is that that is what the BCs explain, is that the goods or services to customers is actually usually understood to be an output, and especially after the introduction of IFRS 15 in Ind AS 115, this is very clear that most entities would have an output which would be relatable as goods or services to customers. And dividends or interest generate investment income was already there, and they have removed the lower costs and other economic benefits, as we have seen, because the objective of the transaction, the acquisition, is not that important. It is the nature or the characteristics of what has been acquired is what is important. So that portion of lower costs, other economic benefits has been removed, and goods or services has been inputted in the definition of output, and therefore it has been carried forward to the definition of business in Appendix A. When we come to, so this was B7, and then again in B they have added a new paragraphs rather, but the main context of those paragraphs are optional tests to identify the concentration of fair value. So this is basically to identify, as mentioned very briefly in the amendments that whether the fair value of that particular transaction, the purchaser is, I mean, it is very clear. It's based on the facts and circumstances that it is concentrated in a particular asset or a group of similar assets. So that is what the standard says. Optional test, that is the concentration test. It's an optional test. So it is not that the entity has to go through it. It can go through it if it wants, to permit a simplified assessment of whether an acquired set of activities and assets is not a business. So this is to simplify, because lot of transactions would be very clear that they will not be business, and therefore they will be, if the entity knows that it's an optional test, it will be very easily doing that. Then, so that is the main thing. So you require, what are the requirements of this? It's if substantially all of the fair value of the gross assets acquired is concentrated in a single identifiable asset or a group of similar identifiable assets. So obviously the concentration test is met and the set of activities and assets is considered not to be a business. So it is not concentrated. So if the fair value is concentrated, so here a key word is the fair value gross assets. Key words are fair value, gross assets, and it should be an identifiable asset or a group of similar identifiable assets, as well as substantially all. So we'll look into that. And if that is the case, it's not necessary to go for any further assessment. And they can account it as an acquisition of asset under the particular standard in which that transaction would fall. So concentration test is designed to reduce the cost and complexity. So we need not do a detailed assessment in some circumstances. So that is based on the judgment. And since this is an optional test, it does not prohibit, the standard does not prohibit an entity from carrying out the detailed assessment required by the paragraphs 8 to 21D. If the entity has carried out the concentration test and concluded that the acquired set of activities and assets is not a business, it might still do it, but it may not do it also. So the concentration test is the key words there, which we'll just explain. The gross assets, it is the fair value of the gross assets, not on the net assets. The reason has been explained in the BC, because obviously the existence of debt or other liabilities is not relevant, whether the acquisition is a business combination. Tangible assets, so this is that was from the BC. Then the next point, this is regarding the similarity of assets. So tangible asset attached to another tangible asset, which cannot be used without incurring significant cost, reduction in utility or fair value to either asset. For example, land and buildings. The land and the buildings cannot be separated easily. They constitute a single group. And when we are trying to judge or assess which are those assets which are similar, the risk characteristics of assets used for identification is important. So similar risk could generally mean that they would be similar, but not necessarily. So, a point to remember is that even if they are similar for the purpose of this particular test, they may not be separate. They may not be separately recognized in the balance sheet. For example, land and building. They may be, they may not be. And examples have been added. Plenty of examples have been added in the illustrated examples of IFRS 3 with different scenarios where they are and where they are not. So there are a lot of things there. Now we come to the major thing, as we had mentioned, as we had seen earlier, that it's inputs and a substantive process that are bare minimum necessary for a transaction to be a business. So in that case, they have added two guidance. The standard has added two guidance, I mean a detailed guidance, that's para 12B as well as para 12C. So they have separated it out into an acquisition when the assets and activities acquired do not have outputs. So in that case, the standard is very clear that the process is substantive if both the criteria are met. They have given criteria and both the criteria need to be met. And what can be an entity, assets and activities which have been acquired but they do not have output, they've given an example of early stage entity. So in such a case, it is important that firstly, that whatever the process that has been acquired needs to be critical to the ability so that to develop or convert the acquired input or inputs into outputs. So there are inputs and the process which has been acquired has to be critical so that it can convert the input into output. But this is not the only condition. There is another condition, which is that the inputs have to include both an organized workforce. And here the organized workforce has to have the necessary skills. And it also has to have, not the organized workforce, the inputs. One is that it should have an organized workforce with necessary skills, not just ancillary or secondary skills. And secondly, there should be inputs which the organized workforce can develop or convert into outputs, that is other than the process, which is critical. So they have given some examples where the organized workforce should have these inputs. They are intellectual property, other economic resources. There could be some substantial rights, for example, to get some material or rights which are very material, and in-process research, development projects. So the main thing to remember here is that the process has to be critical. There has to be a workforce and there has to be other inputs also, which the workforce can convert to deliver the outputs. In 12C, they have gone further and said, what if the acquired assets and activities have outputs? And these are on the acquisition date. Then when is this process substantive? Because obviously the process may not yet be a substantive, but is it substantive? So for that, we have to refer to the conditions of 12C. Here they are by or. That means either A or B of 12C are satisfied and the process can be termed as substantive. So the process is critical to the ability to continue producing outputs, and the inputs acquired include an organized workforce which has the necessary skills, and it is not and, it is or the process significantly contributes to the ability to continue producing outputs, and it is considered unique or scarce, or it cannot be replaced without significant cost, effort, or delay in the ability to continue producing outputs. So here, in certain circumstances, the organized workforce may not be necessary, and yet the process may be considered to be critical. So this is basically the two very important clarifications the standard has introduced. And in appendix, the same appendix in para 12D, they have given certain extra guidance in the standard itself, in the appendix in the standard itself. And these are over and above the examples given in the illustrated examples. So they have specifically mentioned in the standard itself, in this particular paragraph, that acquired contract is an input. It is not a substantive process, but it may give access to an organized workforce. So we will have to actually assess whether this is giving an organized access to an organized workforce, then see whether it is performing a substantive process. So whether the organized workforce has the necessary skills to perform. So all those things need to be judged. So, but in general, just an acquired contract is not an input. So this is a general statement And there can be facts and circumstances where an acquired contract in combination with other, there can be a substantive process. So factors to be considered in making that assessment also, they have given some examples. The difficulties in replacing the acquired organized workforce would indicate that it is performing a very critical role. So in that case, that is an indicator that it's a critical role. But again, the difficulty could be because of some labor laws. This could be. So it depends upon the particular judgment of particular judgment of the facts and circumstances. And a process or a group of processes is not critical if it's performing some minor or some ancillary within the context of the processes required to create outputs. So that is all from my side. And of course, there are a lot of examples added in the illustrated examples, which should help us to go, more in depth and understand the basic concept of the change in the definition. Thank you very much.
Ignesh, you are on mute.
Thank you so much, Aprijat ji. I have one question for you, maybe on behalf of the participants and everyone, because उनके बिन बोले शब्दों की आवाज में सुन चुका हूं, और मैं ये पूछना चाहता हूं आपसे कि ये examples कहाँ मिलेंगे?
Examples in the illustrated examples of IFRS 3.
अच्छा अच्छा, नहीं वो तो मैं भी सुन चुका हूं, but कुछ स्रोत उनका सोर्स बनाएंगे तो बहुत अच्छा रहेगा.
Yeah,
because illustrations will make a lot of difference. Yes, am I right? And now to Vidyadhar ji for the rest of the questions, answers, and all this. And it's over to Vidyadhar ji for the rest of the session, sir.
Yeah. Thank you, Ignesh ji, and thank you, Aparajita, Parminder ji, and Dr. Sanjeev Jugal in absentia for giving technical inputs on this. Now, the most important session, we have time, 20 minutes time now. Yeah. For Q&A session, which I know that we have received some questions, nearly around 40 questions or so, but we'll try to take a few of those, the important ones. We'll consider those questions. That's the session we'll, Ignesh ji, I would like to take up now. Yeah. And before there were two general questions which you also just earlier briefly you mentioned. Where do I get these illustrative examples and for conclusion and these materials? The first, that to all the participants and everybody, please note the ICAI 1 year ago entered into an agreement, copyright agreement with the IFRS Foundation, and we have made available the part B, which consists of the illustration examples which Aparajita ji was referring to, and part C, which is the basis for conclusion also, which gives a good inputs. Both these are available on our ASB website, and these you can access free of cost. If you subscribe to the IASB, then you need to pay say annual subscription. But here, for the benefit of the members, the institute has made it available free of cost, and these can be accessed on our website.
That's great.
Yeah. And the another question which many of the participants have asked is whether the presentations which all this our technical presentation made, will they be made available? Yes, these will also be made available along with this video recording of this webinar, which will be available on our ASB website, ICAI's ASB website, and under the another tab, ASB events and conferences. So you will be able to see that also there. So Ignesh, with this, can I try to attempt to clarify a couple of questions which were
sure.
basically asked? See, one of the sort of I'm not taking those questions in particular order, but just about the based on the standards. And I request my colleagues Parminderji or Aparajita or yourself, Agnesh, if you'd like to say
Yeah,
anything,
sure.
you can add there.
Sure, sir. हम
See,
सब साथ हैं, sir. हम सब साथ हैं.
Yeah. See, one of the question with reference to, I think it is with reference to Ind AS 116 amendment made. Question is, if interest rate changes are not given effective, then how do we say that financial statements give a true and fair view? So this is the question, a very interesting question, very fundamental question. The person is asking. Here, from the standard setters point of view, one of the important things to note is that there are certain requirements before you apply this practical expedient. One of the thing is that the payment concession or the waivers which are going to be there, these should not be substantially different from what it was there earlier. And another condition also that there should not be a substantive changes in other terms and conditions of the lease.
Other terms and conditions, other than the renters and all this.
Yeah.
The period, like the usage terms and all the things.
Yes. Yeah. And plus even the rental payment also, it says that it should not be substantially different.
And ये ना बोले कि it is only limit up to next year, right, sir?
Yeah, next year.
Yes.
And this is also very rightly, Agnesh, you brought out that this is available only if the concessions are etc. given with the reference because of the COVID-related global pandemic, which is a very unexpected scenario. Probably happens once in a century or so. So from that perspective, keeping in mind the materiality concept, these conditions have been put in. And plus also important thing to note is that it is an option given to the entity, and if some entities feel that this is a material amount, it may affect their true and fair view. They need to weigh this option also, whether they would like to use this or not. And apart from that, this material consideration is there. I hope.
Vidyadarji, आप ये कहना चाह कि it depends on case to case. So there cannot be a standard bright line for any such things. Am I right, sir?
Yeah, that's right. And one thing is also, we also have been designing, because by putting that condition of should not be substantially different, and only the concessions, not the increases, etc. Also, so that is why, to some extent, in our view, probably this concern about the true and fair view of not discounting this because of this change is getting addressed. That's the view.
Very good, very good.
And the another question which is there is that what happens when the deferral is, say, if it stretches into 2 financial years? That is the question. So yeah, Aparajita or Parjinder, any would like to reply this, or can I go ahead?
Sir, where is the question of this getting spread over a period of 2 financial year? Maybe maybe there'll be only 31st March 2021 and up to June. So maybe a period of 3 months for the next financial year, and maybe 1 entire year during this financial year, right, sir? Yeah. So they meant to say how the entries to be passed. You meant to say amortization of the benefits. That's what they are asking for.
No, but if it stretches to 2 financial year, what to do? That's the question. Probably my answer would be, maybe you can also add, is yes, there is a possibility, because the COVID started sometime in January 2020. In Indian scenario, say for example, it is March 2020 is the accounting year, and there is a next year 2021. So it may have impacted there could be some amount of a concession given relating to February, March also. So in this scenario, what if your accounts have been closed actually, then there is a transition retrospective application provision which says that anything up to that previous year closed accounts, the impact you actually capture this as part of the retained earnings. And for the April 2020 onwards, the impact you will capture in the current year.
Current financial year.
Yeah, current financial year.
Yeah.
So that's the way we need to do this adjustment. And in my view, there is a similar question also which was asked. One of the question asked was, how do you account in retained earning, or when is the situation arises that you need to take in retained earning? So basically, the example which I gave, like if you have now you have received say concession, and if it relates to March 2020 and you have already closed your account, then during this current year, what is relating to up to March, you take it as retained earnings
on 1st of April 2020.
Yeah, 20. Like
so
that.
March 20 की जो रियायत दी गई है, which has been received, which has been you knew only in financial year 2021. But I believe, sir, here the date of authorization is important. Don't you think so? Because if the accounts are not authorized till now, so they can definitely take the impact in March 20.
Yeah, they can. Then this
then retained earning का वो मसला नहीं होगा तब.
नहीं होगा.
Correct, sir. So let us conclude like this, that if the concession relates to March 2020 and the accounts are not closed now, correct? Because it has been permitted to, the extension here. And so then it would be considered as an adjusting event.
Yeah.
Correct. It would be considered as an adjusting event, and as a result of which they can give the effect in March 2020. तो उसमें फिर कोई गुंजाइश या कुछ आवश्यकता नहीं है retrospective while you do the accounting of 2021.
Yeah. And we have given this special this one this kind of wording. I'm sure my colleague Parminder and Prajita would agree that this kind of wordings in transition we don't do normally.
Oh, I see. तो ये भी हटके है कुछ हटके दिया.
Yeah, this is also because the situation is so COVID related situation, so that's the reason we gave.
मैं समझता हूँ कि परमिंदर जी कुछ कहना चाहती है और मैंने उनको कुछ डिस्टर्ब कर दिया. आप कुछ कहना चाहती है परमिंदर जी, प्लीज?
I would just say that this is just like providing early application option, wherein we have mentioned the date 1st April 2019 if the accounts are not closed or authorized.
Not closed or authorized. Very important. Very important. Good. Thank you, Ji.
Yeah. And there is another question, simple one is there. If there is a force majeure clause is also there, and then there is a rental waiver is also there, whether the entity in such scenario can they use this practical expedient. Yes, important consideration to see that is this concession waiver given because of directly due to COVID related situation, because that's one of our starting point. If it is there, yes, even if there is a force majeure clause is there, should not be a problem. So one can use this practical expedient in that situation as well.
Correct.
Yeah. And another question before I go to that, the other two standards. One quick one on this IBOR Ind AS 109. One of the comment which was made is that it's not clear what the amendment is. Yes, the topic is such, it is a bit complex. A couple of things to mention there is, one is this amendment relates to changes happening in the interest rate benchmarks like LIBOR, etc., getting replaced by another this one. And what the problem arises is that when you are, for example, using the hedging instruments like interest rate swaps, etc., which are linked to the LIBOR, when you have to assess the economic relationship between the hedge risk and this hedging instrument, or when you are actually valuing the interest rate swaps, the future payments happening have to be estimated. While estimating that, you need to take into account, question is whether LIBOR will continue or will not continue. That was the question to many of the users. To address their concern, this amendment has been made that as earlier, before this reform, etc., which is happening, you would assume how the LIBOR will be there for next 3 years. Continue to use that and calculate the fair valuation of that hedging instrument and determine your hedge accounting. That's what this standard, this amendment is done. That is the crux of this amendment. And my only suggestion, one more thing, is that the basis for conclusion of the IFRS 9, which is the basis for our amendment, etc., also gives a good amount of clarification and explains this, how it, what is the rationale for this. And like earlier in the beginning, I mentioned where this part B, part C of the materials are available. They're all available on our website. I request the participants to please make maximum use of that, because ICAI has specifically made efforts to provide you that kind of a global education material for that purpose. So, Agnes, the another interesting question, which I think Parminder can take that, is in days one. Question is, how do you determine primary users? There was a reference to the primary users. How do you determine primary users?
Yeah, actually, Ind AS 1 very clearly mentions who are the primary users. It says that many existing and potential investors, lenders, and other creditors who cannot require information directly from the entity, but they have to rely on the general purpose financial statements for making various decisions. So those are the primary users of the financial statements. Because even the conceptual framework has a lot of discussion on this part, primary users, wherein it says that those who have to take decisions like holding equity shares or disposing of those shares, I mean investors, potential investors, then creditors who have to decide on lending terms and whether to continue with the loan, and those who have voting rights, those who want to influence management in taking various decisions with regard to the entities functioning. So those who cannot ask the information, but they have to rely on the financial statements for these kind of decisions, like what are the assets, what are the liabilities, how to manage, how are they being managed. Those who want to understand all this, those are the primary users. And it conceptual framework goes on to say that yeah, there could be some other users also. For example, regulators, they also use the financial statements, but they are not the primary users from the entity's perspective, because these users, investors, lenders, they are taking decisions about the entity, and they need information for taking those decisions. So these are the primary users: investors, lenders, and the creditors, etc. So this standard specifies clearly.
Yeah. So, Ignesh,
Very good.
Yeah. Another question, which is relating to Aparajita ji on Ind AS 103. I'll just read out. Probably Aparajita ji can answer this, and it relates to our type of area only. Question is, if a company has acquired an IT company comprises of input and significant processes for internal use, and hence the acquisition is not meant for providing services to customers, as the lower cost is deleted from definition, will it still satisfy the definition of a business as per amendment?
The standard is very clear that you'll have to judge whether it is a substantive process. So it seems this is somewhere you don't have an output. So para 12B, this is because you said it was earlier an IT process, as I understood it. If I have not understood it wrongly, it was an internal IT process of some company which has been acquired. So probably it was working as a cost center of that other entity, and now it has been acquired by some company. So it does not have outputs. So what is to be seen is what is acquired. What are the things which have been acquired? So if it does not have outputs as of now, so need to see whether as per para 12B, is there a workforce which has been acquired? Is the workforce critical to the operating that? There is an acquired contract. So I guess there are some outputs probably. So in that case, so you'll have to see whether it is 12B or 12C which is applicable, and accordingly the conditions of those would. So whether it's a substantive process is what you need to see.
The other substantive process hai, so it will be, and then you have to see the fair value concentration hai ki nahi, right?
that is an optional. So that is the
Optional.
first thing what one can do if you want to do. So
Yeah.
the entity may not want to do if it is very complicated to find out whether it's a similar asset or not. So if there are multiple assets, it might be complicated. So they can go directly for the overall process, the regular process.
Okay.
Yagneshji, we are coming very close to our
Yeah, because
time.
घड़ी की सुइयां भी कह रही है कि अब वक्त आ गया है अलविदा कहने का.
Yeah.
Yeah.
And just one last small question, and then I'll, with your permission, hand it over to you for the concluding remarks.
Yes.
And again, this question also to Aparajita ji. It says that due to a share swap agreement, a company B becomes subsidiary of company A. This has resulted into investments in the balance sheet of company A. Will this be a business acquisition or asset acquisition under Ind AS 103?
So the first thing you will have to see what has been acquired. I think what has been mentioned is the way of acquiring. That is this through this way. This is the mode. But what has actually been acquired, it needs to be seen. The assets or the activities underlying that. So that has to be seen. Right.
So if that company under B, when we acquired through share swap agreement, if that company B has all this criteria which you mentioned, it has a business, it has inputs, outputs, and all those criteria, meets that criteria, then it would definitely use it.
And if that entity B has been acquired.
Yeah.
So that's.
So Yagneshji, with this, I will hand it back to you for the concluding remarks.
Thank you so much. Thank you everybody, right from Dr. Singhal to Vidyadharji to Parminderji and to Aprijati. Thank you very much for dwelling upon this topic. And this was the need of an hour. ये वक्त का तकाजा था, रिक्वायरमेंट थी, क्योंकि अब Q1 के लिए जो क्लोज कर रहे हैं उनके लिए बहुत इंपॉर्टेंट है. Am I right, Vidyadharji? Q1 जो क्लोज कर रहे हैं इनके लिए बहुत इंपॉर्टेंट है, हाउ टू डू दिस ट्रीटमेंट, एंड मोर सो ये लीज. सर लीज ने and this about lease, people will be very pleased to hear what you're saying, right? Because it is really because this is really haunting many companies. किसी का reduction हुआ, क्या करना, क्या नहीं. So people were grappling with this thing that what to do. But now with this, it has really made a lot of difference. Can I know from someone that how many friends we have today online जो देखने के लिए कितने थे? 650 तो कम से कम थे, वो तो मैं पहले सुन चुका था. But I don't know how many. And sir, you have clarified one more thing, that people are confused. ये जो सब हमारे अप्रिया जी और सबने कहा बिजनेस BC basis for conclusion, ये कहाँ से मिलता है? And आपने काफी बखूबी से कहा कि उसका स्रोत क्या है? What is the source of that? Because friends, dealing in the, since I'm dealing in the Ind AS IFRS, I must tell you one thing. एक छोटी हिदायत देता हूँ on this friendship day, that if you want to really master the Ind AS, you must first read the basis for conclusion, because उसमें logic दिया गया है. Why this accounting treatment is there, and that will make your conceptual understanding very well. As Vidyadharji has said, had ICAI not paid this, you would have to shell out, I think, about $230 sterling pounds or something. I'm not too sure, to get the membership of the IASB subscription, right? So it is very well, and thank you everyone for participating on a Sunday, on a friendship day, and taking time of this. And again, congratulations once again, and big thanks to the ASB chairman sir and vice chairman sir and all accounting staff. आज मुझे खुशी इस बात की हुई कि कोई आउटसोर्स नहीं किया गया था, है ना? ये एवरीथिंग वाज फ्रॉम दी, हमारे अपने लोग, अकाउंटिंग स्टैंडर्ड बोर्ड के अपने लोगों ने ही किया, है ना, डेलिब्रेशन, एंड दैट वी विल फील वेरी प्राउड. आज तक आप पर्दे के पीछे काम करते थे, आज आप पब्लिक के सामने आए, है ना? आज आप मुखातिर हुए हमारे सामने सबके.
Exactly, really, we would like to thank you for helping us and taking your time out on Sunday for this important thing which we wanted to connect with our stakeholders. Really, thank you for that from the ASB side. And I would like to also thank all the people who helped us in the other logistics as well, and to the members who have actually joined this, and they are so keen are interested in this accounting area. So I would like to really thank them all for sparing their valuable time for this. And our intention is to have some of these interactions with them. So sometimes you see this is the things like COVID kind of situations help us learn the new ways of connecting with our stakeholders, and it has increased during this period. So we intend to continue to do so. Thank you, sir.
सर वन से जी हाँ बहनों भाइयों, आपको खुशी होगी कि हमारे पार्टिसिपेंट से 1100 के ऊपर मान गए सर. So this ICI is connecting India. ICI is connecting India.
Thank
and
you. Thank you.
Great,
Thank you.
great, sir.
Thank
Great.
you.
Bye everybody.
Thank you.
God bless. Be safe. Take care.